Good morning, everyone. We
Morning, Wayne.
start. We're going to be punctual today. We're only 1 minute behind schedule. Yes.
Thank you.
Thank you. Everyone, if I can ask the IRFA President, Enos Ngutshane, to open for us. I think everyone's seen the agenda that we've prepared and going to work through. Over to you, Enos.
Thank you, Wayne. Let me start by welcoming our esteemed participants, including our important panelists. We are delighted that representatives from the Financial Sector Transformation Council, FSTC, are joining us this morning. I would like to take this opportunity to welcome Busi Dlamini and Noma Sepuma from the FSTC. Amanda Koza, the chairperson of our Transformation and Sustainability Committee, also joins us this morning, and she also joins the conversation to provide input on how retirement funds can use the reporting framework in their planning. The Institute of Retirement Funds Africa is committed to the development of an inclusive and prosperous society in South Africa, and of course the rest of the continent. Therefore, the FSTC is one of the forces that can help shape such a future for us. Please look out for information on our virtual conference that we will be hosting in November 2020. Don't miss it. More information will be shared shortly on the November virtual conference. Thank you very much.
Thank you, Enos. Enos, thank you for introducing the panelists. I know, Brucey, you said you don't want to be a formal panelist, but please feel welcome to contribute when you want to. What we did, again, is just a highlight. We're very grateful to our colleagues from the FSTC who have prepared a comprehensive slideshow for us. And Norma, I understand you're going to be taking us through that. And Amanda, Brucey, please contribute where you can. Thank you very much. Norma, you'll share your screen.
Yes.
Thank you.
Thank you, Wayne. Good morning, everyone. As Wayne has pointed out, we as the FSTC have prepared a slideshow to take you through basically just the background of the FSTC and where we come from, and then we'll speak to the retirement fund scorecard specifically. Wayne, I'm trying to share my screen. It says you've disabled the function. Could you just enable it on your side, please?
I'll do that for us now quickly. Just give me a sec. Apologies. Yeah.
Okay.
You should be able to share now. Thank you. Thanks, Norma.
Thanks, Wayne. Basically, as I've pointed out, it's really to give context in terms of the role of the FSTC within this BEE transformation space, and specifically for the financial sector, and how it came that the retirement funds are included in this reporting framework, and what those retirement funds need to do in order to comply with those reporting requirements. And lastly, I'll just speak to the review of the code, a process which is underway at the moment, and just give you highlights in terms of where we are and some of the implications that might impact on the retirement fund scorecard, and therefore the reporting requirements from the retirement funds. Just that the structure of the presentation. I'll take you through the FSTC background. The amended scorecard, which was gazetted, or the amended code, which was gazetted in 2017, and some of the elements in that code that apply to the sector as a whole, and then speak more specifically to the retirement fund scorecard. What was then called the Charter Council was established following the 2002 NEDLAC Financial Sector Summit, looking at the sector committing to establishing a transformation charter that would look to achieving the goals of transformation as espoused in the BEE legislation. The charter was negotiated in 2003, and that the Financial Chapter Council was established with mandate to oversee all matters relating to the code, what was then the charter, and its implementation and compliance with. The FSC Council is now established in terms of the BEE Act number 53 as amended in 2013, and in 2018, the Financial Sector Charter Council was rebranded to what is now the Financial Sector Transformation Council. The structure of the council comprises of the overall council, which involves senior members of the different constituencies. We have a technical committee called the Reporting Working Committee, which is a subcommittee of the council. And we also have a board of directors that looks at more the operational issues regarding the council. And we have the secretariat, including comprising of myself and Busi and a team of 6 other staff members. The parties involved in the development of the code and who are now currently constituencies within the structures of the council, the Financial Sector Trade Associations, ASISA, SAIA, the Banking Association and the International Bankers Association, the JSE and its members, the Financial Intermediary Association, the South African Venture Capital Association, which include private equity managers as well as BATSETA. We also have the Association of Black Securities and Investment Professionals as a constituency, and government comprising of the Presidency, National Treasury, and the Department of Trade, Industry and Competition. NEDLAC organized labor with the 3 main federations, COSATU, NACTU, and FEDUSA, as well as NEDLAC organized community representing the various community bodies. The council really looks at, or the main mandate of the council is really to negotiate issues around the implementation of the code through the technical committee, the reporting working committee, and any issues involved in that final decisions are taken by at council level, requiring consensus amongst all the constituencies. And the council is supported, as I pointed out earlier, by a full-time secretariat. And currently we are funded by the business constituency. And it's really providing oversight through the governance structures. As a requirement, we are required to publish annually the transformation report based on performance of the sector. And that report goes to government, to the DTI, as well as National Treasury. We continue to monitor legislation and its appropriateness and application in the sector. And as indicated, we are currently reviewing, undergoing a process of reviewing the code. We issue technical guidance notes to assist and give guidance on the implementation of the various aspects of the code. And we also evaluate exemption and compliance applications that are submitted to the council. We periodically review and agree with the sector the targets for access to financial services and empowerment financing, which are elements within the code, and as indicated, review the code as a whole. In 2018, a decision was taken to kind of broaden the mandate of the council to give it more strategic influence around financing mechanisms and how those can impact, or how those could be used to impact and give impetus to transformation in the sector, including, for example, the facilitation of funding and execution of transformational infrastructure, and the facilitation of funding for higher education. Those are some of the more strategic issues that we feel the council could play a role in influencing and making sure that there is, through those issues, there's an impact and progress is made on transformation. In terms of the regulatory environment, there is the BEE Act, which provides guidance for the development of the codes of good practice, or the generic codes as we call them. And the Act actually is a primary legislation, and therefore trumps other forms of transformation legislation. The generic codes then gave rise to the development of the different sector codes, of which the financial sector code is one of them. And the sector codes trump the generic codes once approved, but they continue to be aligned and draw from both the generic code and the Act as required. The amended FSC itself, as is indicated, following the code was negotiated from 2012, if I'm not mistaken, and eventually there was agreement and it was gazetted in 2017, on the 1st of December 2017, and applies to all operating entities within the financial sector, including all of the industries and entities that are listed there. And the retirement funds industry was included initially with the voluntary, or as it stands with the voluntary dispensation in that Gazette of 2017. Entities that are eligible to report under the code, all generic entities, which are entities with a turnover of 50 million rand per annum, 50 million and over, those are required to comply to the code and to report annually to the Financial Sector Transformation Council. We also have another categorization of qualifying small enterprises. Those are, have a turnover of between 10 and 50 million rand per annum. And those that are 100% Black owned attributed as being level 1 BEE rating, and any entity with 51% and above would then earn a level 2 BEA rating. We also have EMEs, emerging micro enterprises, those that have a turnover of less than 10 million per annum. All EMEs would categorize as level 4 BEE rating, with exceptions of where they are 100% Black owned or 51% Black owned, which earn a level 1 or level 2 rating. This is because for QSEs and EMEs, EMEs are not required to comply with the code, or well, they are required to comply, but they're not required to comply with all the elements of the code. And therefore, when they report, all they do is they submit a sworn affidavit to the FSTC where they indicate their ownership, whether and whether there will be a level 1, level 2, or level 4. Similarly, with QSEs, they have an option to either be measured against the element in the code, or to submit a sworn affidavit to the FSTC. And if they do elect to submit a sworn affidavit, then they have to indicate their ownership levels and whether they would qualify as a level 1 or a level 2 enterprise. The key principle within the code is that each financial institution, irrespective of whether they are a member of a group, is expected to be measured and report on its own to the FSTC. However, the code does give opportunity to entities, especially those that are members of a group, to report as part of that group, but that entity has to apply to the council, and approval has to be given at council level for the entity to report as part of a group. And each entity that is measured and reported, all those reports are meant to be submitted to the FSTC on an annual basis, and failure to do so will result in the entity being discounted by one level in the next reporting cycle. The council also has the right to name and shame entities that do not comply and do not submit reports to the FSTC, and we actually started that practice last year, where in the annual report that we published last year, some of the entities that have not reported have been listed in the report. The Financial Sector Code comprises of 7 elements: ownership, management, control, skills development, enterprise and supplier development, which includes preferential procurement, supply development, empowerment financing, socio-economic development and consumer education, and access to financial services. I've already spoken to the 3 categories of the entities and how they are classified according to their turnover, and the total scorecard points is 112. There are, with the 2017 Gazette, there were elements that were classified as priority elements, and in those priority elements, ownership, skills development, enterprise and supply development, including procurement and empowerment financing, entities have to earn a minimum. There's a threshold of 40% of the points attainable in that element, or in each of those elements, that every entity has to meet. And failure to meet that 40% threshold means that the entity is eligible for discount by a level in their next reporting cycle. So in terms of the retirement fund scorecards, many of the aspects or the elements that I've spoken to in the broader code do not apply to retirement funds, as they are not for-profit entities. So the main aim of the scorecard was really to encourage retirement funds to provide for fair and equitable treatment of its suppliers and its employees, where it was recognized that retirement funds have a critical role to play in transformation by virtue of its appointment of private service or private sector service provided within the context of the amount of member savings which the retirement funds control. And the scorecards really consists of 2 main elements: management control and preferential procurement. Management control is the one that speaks to the treatment of employees, and procurement is the one that speaks to the appointment and treatment of suppliers. The other elements that contained within the code then do not apply to the retirement funds. Within the sector. So as indicated, the scorecard is basically management control and preferential procurement. However, retirement funds are expected to disclose on ownership and skills development, and I'll come to those in a little bit more detail. And as indicated, the other elements do not apply. So the reporting principles are really around fund liabilities that are attributable to Black people, the scorecard with the 2 elements, the training of trustees and management or staff of those retirement funds, and some of the initiatives that the retirement funds undertake to skill their staff, and also future plans on improving on their BEE scorecard. So those are the 4 main thrusts around the reporting requirements for the retirement funds. I'll start with the fund liabilities because retirement funds have little or no influence at all on membership demographics. They are not really expected to be scored on the ownership part of the BEE scorecard, and therefore they are, I would say, exempt from that ownership element. However, they are required to report annually on the proportion of their fund liabilities that are attributable to Black male and female members. And this is based really on the code, on the element of ownership in the code. And the measurement principles, therefore, that are enshrined in that element would then apply for retirement funds, and an independent competent person's report would be required for mandated investments where those fund liabilities are then set out. Then for management control, the scorecard looks at board participation and membership at board level, and the voting rights that are attributable to Black people on the board, and exercisable voting rights for both Black people as well as Black women on the board. And those 2 categories and different points, the targets for Black people on participating in the board would be 50% with a weighting of 8 points, and for Black women on the board would be 25% with a weighting of 4 points. And in terms of executive management, we look at the principal officer and other senior and executive management, the target there being 50% with a weighting of 8 points, and the total score there would be 20 points. For the measurement of skills development, as I indicated earlier, the scorecard really looks at the kinds of initiatives that the retirement funds takes and programs that the retirement funds takes to train and upskill their trustees, their executive managers, principal officers, and other staff. The requirement is for the fund to then disclose the value of accredited SAQA-approved training that is spent on trustees and managers and other staff. The average training per staff member, the number of staff that is trained, and they're also required to disclose examples of some of those key training programs and interventions that the staff has been undertaking. And also in terms of the initiatives, the training programs themselves or education programs themselves, the funds are expected to disclose the number of members that are trained and the amount spent on the training relative to the size of the membership of the fund. The last one is procurement, which looks at procurement from suppliers that are recognized as empowered suppliers. There are 4 categories. The first one being the target of 75% in the first 3 years. It's a graduated, or these are graduate targets based on BEE recognition levels as a percentage of total measured procurement spend. Then there's a category or an indicator for procurement from all suppliers that are QSEs and EMEs based on the categorizations that I indicated earlier, and that as a percentage of TMPS, total procurement measurement spend. And there's also an indicator for procurement from all suppliers that are at least 51% Black owned, also as a percentage of total measured procurement spend. And the last one being any procurement from suppliers that are at least 30% Black women owned, as also as a percentage of total measured procurement spend. And as I indicated, the targets are graduated targets with a target set for the first 1 year to 3 years following the gazetting of the code, and then in year 3 and after that, then the targets have increased to 80%, 25%, 25%, 5.5%. The weightings are indicated there for a total score on the procurement scorecard of 80 points. And then, as indicated, these are the compliance categories in terms of the EMEs, QSEs, and generic enterprises, and the requirements in terms of their BEE levels and how they attain those levels, and in order to be able to qualify in terms of the BEE certificates and scorecards, and in the case of EMEs and some QSEs in terms of a sworn affidavit. So we'll get a level 1 and level 2 for EMEs, or a level 4 for those that are not 51% or 100% Black owned. A level 1 and level 2 based on ownership of 100% Black owned or 51% Black owned. And for generic entities, those are subject to measurement on all the elements in the code, and but they're also subject to empowering supplier criteria. So as indicated, the retirement fund scorecard at the moment is a voluntary dispensation for the top 100 funds, and they're expected to report annually to the FSTC. And this reporting should speak to the requirements as I have set out, but also include a report on how the fund intends to achieve its score going forward, and also improving on its scores. And the reporting is also intended for the FSTC to include the measurement of retirement funds in its annual report that goes to government, and where there's not enough reports that have been submitted, then this may also include relying on surveys, because we do recognize that reporting at the moment is voluntary. But however, the code does give provision that in the case that not enough disclosure or there's not enough disclosure by pension funds in terms of reporting, consideration will be given to revising this voluntary dispensation. And in terms of the review process, I'll come back to the issue of the voluntary dispensation. In terms of the review process, the process commenced in February of 2019. The code did gazette, or as part of the code that was gazetted in 2017, it was provided that, or provided for in the code that the code would be reviewed after 12 months, or from a period of 12 months from the gazetting. And therefore, this is why the code is being reviewed. And this is really to take into account some of the issues that were raised in the parliamentary hearings that took place in 2017 on transformation, and some of the proposals that came out of those parliamentary hearings. And there were other issues that were not incorporated in the code that was gazetted in 2017 due to time constraints and negotiations that were still ongoing at the time. We've established 8 committees, a committee per element in the code, as well as one on general principles. There is a subcommittee on the retirement funds scorecard that considers all the issues on the retirement fund scorecard. And we anticipate that a draft will be submitted to the DTI in November of this year. Some of the key proposals that have been made with regard to the retirement fund scorecard, the main one being that the scorecard should now be made compulsory for all pooled funds and be made part of the main part of the FS code, and also that disclosure requirements be made compulsory to ensure that all retirement fund members have equal access to information and can take action as desired. And that disclosure in the verification website, the verification certificate or the website of the retirement funds of member asset value by population and gender demographics, which also should be made compulsory. And that the reporting that is made to the FSTC and to the pensions regulator, there should be some form of standardization and a similar forward or the same forward be followed when submission is being made to both authorities. And the principle of explaining the failure to meet targets should apply to all retirement funds when they report. And maybe just to give some context to that, the scorecard at the moment, as indicated, is voluntary for the top 100 retirement funds. For the 2017-18 reporting, for which led to the publication of the annual report in December last year, we did send out communication to the industry in terms of reporting, but we did not receive any, to my recollection, we did not receive any reports from retirement funds. This year, we sent out communication in May, also with the same requirements for retirement funds to report for the 2018-19 report. And so far, we have received 10 reports from retirement funds, which represents 10% of the top 100. And this is part of the conversation in terms of if there's not sufficient disclosure, then there should be a relook at that voluntary dispensation. That's the end of my presentation, Wayne, and I guess we'll open for, I don't know if Amanda or Busi would like to make inputs at this point.
Thanks, Norma. That presentation was quite thorough. I think I just want to touch on a couple of points that I've seen come through in some of the Q&A. And I think for a lot of people that are attending today, the the biggest issue is how can you practically implement? And as you can see from what Norma indicated, that there is a lot of agitation for this scorecard to shift from being voluntary to becoming mandatory. And therefore, it's important for the retirement fund industry to be proactive in starting to find mechanisms and putting together plans in order to respond to this framework that has been laid out. And I think what's most important is to understand the critical role that the retirement fund industry can play in actually transforming the financial sector industry and our economy as a whole. We already know that, at last count before lockdown, we had approximately 4 trillion rands in retirement savings, and these assets are well placed to advance both transformation and ESG strategies. So I have a question for retirement funds in accounting for and counting in transformation in their plans. Is the question around commitment to transformation from the retirement fund sector. And if there is a commitment, then it should be made and placed on record and then activated and measured. I think what's missing is words not put into action plans. And as a form of guiding how one can start practically applying the principles laid out by the FSTC, is to think about how, for example, the PF 130 guides the drafting of the investment policy statement. And in these guidelines, it includes the purpose and scope of the IPS, the preparing of the IPS, essential elements of the IPS, risk management, voting rights, asset manager mandates, and communication, etc. And I think if you look at how these elements are set out, one can start drafting a transformation policy statement and using the IPS as a form of reference on how to start engaging on matters to make into practical, tangible plans what is required by the FSTC. So instead of just seeing it as just an extra piece of compliance, start seeing it as a way of business or managing retirement funds, and this will make the adoption of this legislation more sustainable and easier to implement. And I know that some of the questions that arise include things like, but there aren't sufficient firms to procure from who have the requisite experience and the tools. And for me, the discussions have been on the table for quite a number of years on the code in general, and also specifically on the retirement fund code, which was first proposed in 2017. And there have been numerous opportunities for entities to start creating an environment that can be able to comply. And with regards to experience, I mean, one of my issues on the experience factor Hello?
Maybe Amanda, you there? You're there.
Yes, I am.
Yeah.
Okay, great. So with regards to experience, for me, that remains a problematic excuse to use, especially because, I mean, I, for one, have been in the industry for more than 20 years. And I know many friends have also been around for that long, some for even longer. So to discount the experience that is in the sector as an excuse for saying that there aren't enough suppliers is a big problem. So I think for me, the biggest two issues that I can see is they're not availing of mandate opportunities to Black FSPs. So Black-owned asset consultants, actuaries, employee benefit providers, as well as asset managers, and also complaining about supply or the the ill suitability of FSPs, which, as I've indicated, is quite debatable, but the number of suppliers being availed. So to make it more practical, these are the steps that I would recommend for a retirement fund to consider. To start by drafting a transformation policy statement akin to an IPS, to set parameters or targets which are guided by the FS Code, to actively consider these commitments and appointment of FSPs by looking at their transformation status, asking for their transformation plans, interrogating specifics in those plans, such as who the investment team is, looking at organizations that provide a multi-manager solution, interrogating their underlying investments. If it's an FSP that is not yet transformed, looking at their plans and timelines, and holding these entities accountable as well. And for me, that is how you start enabling transformation to happen, by asking the right questions of the FSPs. And from the FSP's perspective that are already included in a retirement fund's value chain, they need to look at these questions and start changing or transforming to achieve and be part of a more transformed industry. I think also on a practical aspect, I also know that, cost and capacity are seen as big issues. Therefore, the FSTC, in partnership with the IRFA, plans to play a more enabling role, as Norma has indicated, by providing guidelines and basic steps for implementation. And these basic steps include things like the transformation, drafting of the transformation policy statement, commitment, conducting a gap analysis, setting targets, setting aside a budget, developing an implementation plan, including a monitoring and evaluation and reporting plan, and also setting an accountability matrix. And the process is not onerous. It can be outsourced. As I've said, the IRFA, the FSTC, as well as FSCA are available to support the retirement funds on this journey. And we cannot expect, that there will be economic growth and we can respond to the challenges of transformation in our sector if we don't contribute to economic participation. And I believe that in this forum, we can start collaborating and make this commitment to transformation more achievable.
If I may also add, I actually would like to start by maybe addressing the elephant in the room with regards to BBBE. It is racially motivated, but it is determined to ensure that it addresses inequalities. And it is a redress mechanism to promote inclusivity with regards to economic participation while avoiding the injustices of the past. It re-establishes balance, which is in the long term will significantly enhance South Africa's economic growth. And until that balance is reached, underprivileged people need to be given an advantage in the economy. So we need to see BBBE as a win-win for all South Africans, because it will mean greater economic growth, because more people will be participating in the economy. Also, if we implement it effectively and successfully, BBBE and accelerated economic growth are mutually reinforcing objectives. I just wanted to highlight that. And then secondly, just to add on what Norma had said in terms of the review process, some of the proposals that are coming through from the public in terms of retirement funds transformation. She's already indicated that there is a disclosure recommendation in terms of member asset value by race and gender demographics. We have discussed this. It's not yet finalized, but the proposal is looking at ensuring that this is disclosed, not necessarily in the scorecard, because this would be expensive as it requires verification, but that it should be disclosed in the annual integrated report of entities. There's also a recommendation in terms of management control. If you see that the current scorecard is only looking at management control and not necessarily at employment equity. So the recommendation is that going forward, we will then have a management control scorecard for retirement funds that includes employment equity, meaning that if you have managers, junior, senior, and middle managers, then those would also have to be measured for transformation. There's also a recommendation to extend the preferential procurement scorecard to include enterprise development and enterprise and supplier development. And on skills development, currently there is no measurement. However, the proposal is to include a scorecard for skills development, which will then look at trustee training and also the training of any employees that the retirement fund might have. And there's also a proposal that while socioeconomic development need not be measured or need not have targets, it should be reported on as part of the annual integrated report. And last, just to answer some of the questions, the FSTC is tasked with monitoring compliance. And as we have said, we do have the right to name and shame, and we also would refer non-compliant entities to the BEE commissioner. And we also having the COVID bill, which is currently being drafted, that is looking at ensuring that there is compliance in the sector, wherein entities, when they apply or reapply for licensing, the FSCA will then have to look at how they are performing and also require them to submit transformation plans to determine that they are actually committed to transformation. And the review process is currently underway. We expect to finish it at the end of this year, meaning that we might have a draft sector code gazetted early next year for public comments. We also have a website, FSTC, www.org.za, where we have most of the information that is available with regards to implementing BBBE. Thank you.
Thank you, Ruthie. Ina, Amanda, Norma, is there anything else you want to add at the moment? I think there are quite a few questions, and luckily we have some time left to address them. I think the biggest one that I'm finding immediately. Sorry, Enos, would you like to contribute anything?
No, not at this stage. Thank you.
Is there seems to be a need to us to explain the scorecard again, and hopefully the presentations can help. But I think one of the questions that I, like I said, found quite interesting is, what does the top 100 funds mean? I don't know, Busi or Norma, if you want to answer that. I think any of us can, but it's your domain.
Okay. I'll respond to that. Thanks, Wayne. The top 100 funds have been determined by asset size, and maybe just to answer that, there is a list that was based on that asset size that was developed, and that list is actually on our website, and one of the guidance notes is guidance note 000A, which speaks to group reporting. That guidance note speaks to or gives guidelines on which entities are required to report annually, regardless of whether they are a member of a group or not. And by virtue of speaking to the requirement to report annually to the FSTC, all the top 100 as determined by asset size at the time the guidance note was issued, it was beginning of 2019, all those 100 retirement funds are listed in that guidance note. And as I've indicated, that guidance note is available on our website.
And maybe to add on to that, it's also important for entities to realize that in the review, we also looking at making a reporting compulsory for all retirement funds, regardless of whether they fall within the top 100 or not.
Okay, I think, today is this information session just to help people understand better. Another question that's come up is the issue from when Norma, you spoke about the years, the implementation date. Brucey or Norma, the implementation date for the scorecard was, and then years 1 to 3 and 3+, just so that people have that reference.
The effective date of the current scorecard was on the 1st of December 2017. Reporting is required annually, and annually the FSTC will issue communication when we are compiling data on information to start the process of compiling the annual report on transformation. However, it is a requirement for entities to report annually. So even if the FSTC does not issue communication, the code still requires that entities should submit their report on an annual basis. We issue the call and issue communication just as a reminder for those that would not have already complied with that call for annual reporting. In terms of the application of the 1 to 3 and 3+ years, the first 3 years would have been starting when the code was gazetted on the 1st of December of 2017. So up until the 30th of November 2020, and then the 3+ years would be following that. So that reference is from, or the first year would be from when the code was gazetted.
Thank you. Anyone else want to provide any input there? Great. Then the next question that I'm just picking up, and we'll hopefully get through all the questions. The ones we can't answer today, we'll try and address outside the meeting. Is, I think when it comes to procurement, there've been a couple of issues. I think the demographics of funds and procurement are the two other issues that have been raised. So I think the issue is under the scorecard, when we had a look at the second element other than management, the procurement element. Norma, I think there in your presentation, you highlighted those 3 types of entities, and that would be the weighting that you give to funds purchasing services from those funds. I mean, from those providers. Am I understanding that correctly?
Yes. Can I ask Ausbusi to respond more comprehensively on the issue of procurement?
Thank you.
Sorry, Wayne, can you please repeat the question?
I think there was a question where some people have asked how does the procurement apply to retirement funds? I think it's more about buying services from suppliers rather than the fund themselves being an entity to confirm procurement.
Yes, it does include buying services from suppliers, but other funds also procure their asset or their investment vehicles directly from the funds, and so those will also be measured as part of procurement.
Procurement. So it would be I think the big issue here, and I'm sure you've heard, I know you've heard this debate a lot, is there's some funds that are self-administered. So obviously they have a lot of internal suppliers and management, and then there are funds that outsource many of their services like administration, etc., to providers to assist them.
Yes. So for instance, those that are outsourcing, so that outsourcing services is regarded as procurement, and therefore they will be measured on that outsourcing service.
Okay. And I think sorry, Amanda, do you want to?
Yeah, I just wanted to weigh in on those that self-administer. That would, so they would essentially be a service provider to their own funds, and their own scorecard would then be applied in that instance.
100%. I'm just going to go through the questions again. It seems like more information is needed, but more explanation on the scorecard would be needed for people to better understand. Some of the questions, I think, just reflect the reality of the world we live in, and probably call us to action to ensure that we try and make funds representative of our societies. And one question is asked about trustees and the election of board members. How do you ensure that your board is representative? I think that's an internal process that funds would have to take on. But I mean, Amanda, maybe you want to talk to that one. You know, it's democracy, or we inherit our members. We can't, not inherit, we get our members rather than choose them.
Yeah. I think with regards to you know, the trustee board representation, the targets are, I saw that the targets are 50%, which in a sense it almost aligns to what Rec 28 recommended years ago with regards to a 50% split between member representation and employer representation. The board of trustees isn't so large that even when you are inheriting a membership that is largely or majority white, you could still have a representative board, because a board is a small number that you can easily fill. I think the difficulty, like you rightly say, and the questions that have arisen is on the question around the membership of the actual fund. You know, that is a very difficult one to put in place against the targets, and I think the FSTC can respond to some of the challenges that have been raised by retirement funds on this particular issue with regards to membership. I mean, how do you respond to that target when you are not the ones that are creating or constituting the membership base of a retirement fund?
Okay.
If I may respond, yes. I think it's precisely for that reason that we actually do not have a target in terms of the membership or ownership of the fund. It is just a disclosure requirement.
Thank you. I think these are all important questions, and I think there's an opportunity for us to engage more on this. What I wanted to ask, the one thing that prompted our invitation, and I see we've only got a couple of minutes left, is that letter that was distributed asking funds to do the reporting. The deadline was the 30th of June, and some of our members have asked what can they do to, it's voluntary, so we understand that the disclosure is voluntary at the moment. Secondly, if they do want to do disclosures or provide disclosure, is there still an opportunity for them? How can they come to the party and provide the information?
Thanks, Wayne. The deadline was the end of May, but we have given some exemptions for entities that were not able to meet that deadline. As I've indicated, we have received quite a response from the retirement funds, especially when we compare it with previous years. Funds that still want to report have an opportunity to do so, because when we are considering when we close off and we start the process of actually compiling the report, which will probably be the end of this month, whether if we do not have sufficient reports from the retirements to include in the annual report, we do have opportunity to issue, as the code says, we can issue a separate report based on surveys that we conduct with the funds. So notwithstanding the fact that the deadline has passed, we still think retirement funds do have an opportunity to submit their reports if they are prepared to do so, and we will accept those reports.
Thank you. I think for
also, if I might just add, I would also just like to encourage retirement funds entities that have challenges in terms of implementing or reporting to the FSTC to actually contact us directly so that we can then try and see how we can assist them.
Thank you, Busi. So it's an invitation for funds to call on you for assistance if needed. Thank you. We've run out of time. I know there's a lot to discuss here. Thank you for all the questions. I'm sure Busi, Norma, you'll assist if we send you some of these questions and we can provide some answers outside with Amanda and ourselves. And thank you for the participation. I'd like to hand over to Enos to close off the proceedings for us. And again, thank you, and we will provide responses to the questions outside the meeting. Thank you. Enos, over to you.
Thank you, Wayne. Thank you, Wayne. Let me also take this opportunity to thank our panelists. I would like to thank mainly Busi and Norma for making time to be with us this morning. Thanks for the insight that you've presented during the presentation. I also want to thank our participants for being there throughout the presentation itself. And I also want to thank you for all those wonderful questions that you've raised. I'm sitting here in front of me. I can see that we had about 24 questions that were raised. If you still believe that your question was not answered or responded to properly, please don't hesitate to send us an email at info@irfa.org.za. info@irfa.org.za. Thank you very much for participating in the webinar. We'll see you next time. Thank you.
Thanks, everyone. Thank you. Bye-bye.